Good day, traders. Welcome to today's episode of my weekly Forex Forcast. This is Onunako Tochukwu speaking for Lazarus Capital. So, without wasting our time, let's just go right into the chart. As you all know, for now, I trade the 4-hour time frame, and I do this every week and on Saturdays to share with you guys my trade plans for the coming week. I trade the Bitcoin, the Euro USD, the gold, the Nasdaq, and the US oil. So without wasting our time, let's just go right into the chart. As I told us previously, that the Bitcoin is still bearish, though we are seeing some consolidation at this point, but I told us eventually we were going to see a rise to this area at 78 plus. You all know I'm a trend pullback trader. Once I identify the direction of the market, I wait for price to pull back to my area of value, and my areas of value are usually a good for a sell trade. I want the price to rise to a good resistance area that is visible to the big boys. What are the big boys for me? I trade on the 4-hour time frame, so the big boys for me are the daily and the weekly time frame. So if I'm looking, if I once I've confirmed that I want to sell a market, for instance, the Bitcoin, I want to sell a market, I want to see price rise to a resistance area that is visible to the big boys. Once I see a resistance area that is visible to the big boys, I want price to come to that location, then I wait for my entry confirmation. So for the Bitcoin now, the price is still, the Bitcoin is still bearish. I've done all this last week, but let me just do a brief recap. We can see that the price is moving to the downside. The impulse move started from this point to the downside. So I want to see a pullback to this area. I can see that this location is visible to the the big boys. This is the daily time frame. This location, this resistance area is visible to them. I want price to rise to this resistance area. From there, I will sell the market. If I even go over to the weekly time frame, I show us all this last week, in case for those that are just joining for the first time. So we can see this this resistance area here is clear to the big boys. This is the weekly time frame. So the wait for the price to come. It is from this point that the big boys will participate. So it is where the big boys are. That is where I want to be. That is where I want to be. I said all this last week, so let's not just waste our time. So I'm still waiting for the price to rise to this resistance area. So once I see price rise to this resistance area, I also want to see, is this area, is it in line with my Fibonacci? I want to use Fibonacci to like as an extra confluence of that line. So we can see this is 61.8 of that area that is visible to the big boys. If we take the impulse level, if we take the Fibonacci from this high to this low, that area is 61.8. If we even decide to take it from this point, we can see it's also 50 Fibonacci, and we have the zone here. So in this zone here is where I'll be waiting. Anywhere inside this zone, the price gets to this place, I wait for the sellers to come in, then I join them. So I also told us that last week that I'll be looking to buy the Euro, the Bitcoin, that I see a buy setup here. It is in line, the buy setup is in line with my edge. It's in line with my trade process, that when I get that buy trade, I will take the buy to this resistance area. From there I will exit and wait for the sell. So I got that buy entry last week. I'm still in the buy entry. I'm expecting the price to rise, though we saw this movement to the downside, but it's okay. For the market to move, sellers must come into the market, and that's what you should understand as a trader. Once you are in the market as a swing trader, you shouldn't be scared when the price does a brief pullback, because it is those pullback that will generate the liquidity that will move the price forward. The market is going upward, some sellers has to come in. That will act as a fuel for the market. Imagine a car that is moving. If there's no fuel, the car cannot move. There's no gas in the car cannot move. So this sellers coming down here, now I saw it as a gas for the buyers to take this price back up. So I'll be waiting. I'll expecting to see a movement to this upside. Once the price gets here, I will exit and I will wait for my sell entry at this point. Once I get my sell entry, which I'm pretty sure that we will get that same entry this week. Not that I'm 100% sure, please. Nothing is certain in the market. So, but if we not get it this week, that we are entering and know the upper week. If we don't get the sell entry this coming week, the upper week, the sell entry will definitely come. So from there, we'll execute the sell. So the Bitcoin, I'm still waiting for price to rise to this point. So I'll wait for the sellers to come in. I'm expecting, oh boy, this, sorry, I'm in a buy. So I'm waiting for the sellers to come in. If the price rises to this point, actually I'm expecting it to rise down here, but it might stretch a little bit. Well, whichever way, inside there, I'll just wait for my sellers to come and I will join them here. Stop loss can be here. TP1 here. I'm using 2 TP because I'm expecting the Bitcoin to go to 50,000. So the TP2 will be, my TP2 will be at the 50,000. My TP1 will be at this point. Okay, so let's move to the next pair, which is the Euro, USD. Okay, this is the Euro USD. Yeah, so for the Euro USD is one that was a bit, it has been a bit messy. And guys, that's one thing again, I had to tell you guys that you can see that this week, the tension in the Middle East, the war between Iran, the US and the Israel is really affecting, you can say it's affecting the oil price. It's not only affecting the oil. You must understand that when the price of oil is being affected, it affects every other thing. Just like when the price of oil is being affected, transportation price goes up, and when transportation price goes up, food, also every other thing is being affected. Production cost, rises also. So the oil, the crisis in the Middle East is affecting everything, the currency, the stocks, and the rest. So we can see last week have been a kind of crazy. So what really happened that last week was that after this market moved out here, I was thinking, after this impulse leg, I said, okay, every other thing that will be happening here, I'll be seeing as a pullback. I'll see as a pullback. I was taking these guys are the guys who started the move. My line of departure. You guys know how I trade for now. So okay, this is the line of departure. I was expecting for price to pull back to, I see a good location here. Clear. My 61.8 at this level, which is also a good, support area if I look at the past. Well, I also told you guys that when price gets to this area, don't be in a hurry to sell. Let me move this Fibonacci so count. That's not what we're doing. I told you guys that when price come to this area, don't be in a hurry. Don't be in a hurry to buy, because for the fact that you are expecting the price to come to your location does not mean when price comes to your location you just start buying. You have to wait for confirmation. You need to be sure that the buyers are in. When price comes to your location, you must wait and ensure that the buyers are back. Think about it this way. You want to buy something now, you go to the shop, and the shop owner is not in the shop. Will you just start buying, or you wait for the shop owner? Even if it's a supermarket, at least there will be someone at the, there will be a cash point. Do you understand? There will be a cash from when you pick your stuffs, you go there and buy. When you get to the shop and the shop owner is there, nobody is there to sell for you. You have to wait. So that's the way I see it. When price comes to my location, if my buyers are not around, I must see them, and I must see the volume, and I must see the time of day they are coming in. I must see the time of day, I must see the day of week, I must also see the volume. When I see this thing, I know that okay, my buyers are here, then I can join them. Because when you go to the shop and you are picking a product and the buyers are not there, at the end of the day they will call you a thief. Do you understand? So you can even pick the product thinking that the product is $10, and maybe the buyer will come and tell you, I'm sorry, it's not $10, it's $100, and you cannot pay. So what I'm trying to say in essence is that when price comes to your location, don't, because you know that this location is a good location, and price gets there, you start buying. No, you must wait for confirmation. So we were looking at this support area and say, okay, this place is a good location. If you look at the past, you see that it's a good location that been tested in the past, and price came there. We did not get the confirmation to buy. I said, okay, if you don't get the confirmation to buy here, wait for the price at this point. I'm also seeing that this point is also a good location. The price got here. That one, it even printed some bullish candle. But me, and I no longer fall for this type of candles. So when those candles were printed, I was like, this is not the buyers I'm expecting. This is not my big boys. When they come, I know how they behave. I know the time they come in, and that is why also when you've traded a time frame long enough, you begin to understand how the market participants work. And guys, you must understand that in trading, you are not the only one trading. There are people you are not seeing. It's like a competition. It's like you're in a competition with someone else. There are people who you are not seeing that you are trading against. The money you lose is the money they make. The money they make is the money you lose. It's a zero-sum game. You have to understand that. And you must understand that you are competing with the best of the best. These are guys who have been in the game for years, veterans, 40, 30 years. They have all the information, they have all the indicators, they have everything that they are trading with that is assisting them to make decisions. But you are just there in your room, in your office. You wear boxer and you wear singlet. You just think you can just press buy or press sell and you make money. Guy, you have to do better than that. Do you understand? So you must understand that there are people who you are trading against. There are people who you are not seeing. So when you have stayed in a time frame long enough, you begin to understand how these guys are operating. When your big boys are not around, you look at it that these are not. If my big boys come, I know how they behave. These are not my big boys. Let me wait. So, when this bullish candle were put, I was like, these are not my big boys. I said, let me wait. Before I know it, the price bleed. I said, okay, if this level did not work, this demand area should hold. This is a demand area. This is a strong line of departure. In a battlefield, soldiers don't give up this type of territory. This is like a war to the city. You watch those ancient films, those short films where they build walls to protect their city. This is like the war to the city. They will fight hard to make sure they protect this wall. So I was like, okay, as long as this level is holding, still bullish. This is demand area. Price from this place moved, and it is a strong area. I can see the movement. I said, as long as this level is holding, I'm bullish. And the price came here, and the buyers, they really fought hard. If you watch what was happening here, you see that the buyers were fighting. That's why I told you that when price gets to those areas, they will not just give it up easily. There's going to be a battle. The buyers fought, they fought hard. Eventually, the sellers came in and, overrun them. So, but another thing that now start to look at the market and be like, this market is a ranging market. I can see this demand area here. I can see this supply area here. When this market blew out of this supply area, let me go to the daily time frame. Look at it. Supply, demand, supply. So when this market blew out from this supply area at this point, we're like, okay, we've broken out of this range. We'll see a pullback and a continuation. Or the market pull back and you're like, okay, we shouldn't rush to start selling. Sometimes the market will come back inside the range and break out back. So let's be patient and watch because of these guys that are still here. These guys are still here. So, but the market, came in and blasted them down. I look at, okay, wow, this market, we are still in this range. The market has finally come back to this area. Like I told you guys, when the market leaves a supply area, it's coming back to a demand area. And this is what it did, it came back to this demand area. So, the Euro USD is still ranging. Until I see a break below here, that's when I'll say, okay, officially, the market is bearish. Then I'll wait for pullback. Until I see a break below this demand area now, it's okay. this market is bearish, then I'll wait for pullback. So until then, Euro USD is in a range. And guys, this what is happening in the Middle East now, you guys have to be really careful. The only thing that can save in this market now is your strategy, your edge, your trade process, your psychology. You have to ensure that if the market did not give you your plan, if the market did not come to your location, stay away from it. Focus on your strategy, focus on your edge. Focus on your strategy, focus on your edge. Don't be moved by what the market is doing, because now you've been seeing a lot of movement, ups and down, ups and down, ups and down. Don't be moved by it. Focus on your strategy. It's better not to take a trade than to go against your plan. It's better to miss a trade than to go against your plan. You are waiting for the price to come to a support area so that you can buy, and the price gets to that support area, they not give you your buy setup, and they continue to go down. Allow it to go, guy. There is another week is there. You see this Euro USD now. I was planning to buy this Euro USD this week, but it didn't give me the buy setup. Let it go. Let it go. We will still have another week again. Do you understand? So what I'll be waiting for the Euro USD in the coming days is at this demand area. If I get a buy setup from this demand area, I will buy the Euro USD. Nevertheless, the main entry for this Euro USD, the market is still bearish. The market is still bearish. I can see that the market launched out from this location, from this area of departure. If I take this one from here to here now, if I take this from here to here, if I take my Fibonacci from this high to this low now, we're seeing my 61.8 at this point. 61.8 at this point. Cool. This is 61.8 at this point. So what I'll be waiting for the Euro USD in the coming days, I want to see a pullback to this area. But also, I'm still seeing another area at this point. There's also a good support area at this point. A good resistance area at this point, where the market might pull back to. If I take the stretch this to the past, I can see, okay, see this level. See this level here now. This 1.8 is here from here to here. Okay, cool. This demand area, it was acting as a support. It has been broken. We come back to it as a resistance. So for the Euro USD, in the coming week, I'll be looking for two setup, because the market is ranging. Once the market is ranging, I might have two buyers in a week. I might have a bullish bias or a bearish bias. But if the market is trending, only one bias for the week. Only one, which is if the market is bullish, I'm only waiting for buy. If the market is bearish, I'm only waiting for sell. But if the market is in a range, if I get a buy entry, I can take. If I get a sell entry, I can take. The market is ranging. So for the Euro USD now, because of this demand area that is here, if this price gets to this area, to this demand area, there still remains some few pips to get there. If it gets to this demand area and the buyers come in, I can take a buy. Then if the market pulls back to this if the market pulls back to this supply area, I wait for my sell entry, I can take a sell. So I'm looking at, there's a resistance area here. I might sell from here if I get my sell entry from here, because of this support that will turn to resistance. But if the price might get to this resistance area now and push back up to use this resistance area here, that's from this area where it drops. So from there too, I can if I get my sell entry, I will still sell. You understand? But the market is still in a range. This is the supply area where it dropped from. It's coming to this demand area. If it gets to this demand area, if it gives me a buy entry from this demand area, if I get my buy, confirmation from this demand area, I will go long because of this demand. If the buyers come in here, I will join them and I will take this market, back. At least at the minimum here. TP1 will be here. TP2 can be here. If it pulls back, I'll wait for at this point. If I get my sell entry from here, if my sellers coming from here, I will join them. If they're coming here, I will join them. So in the coming week for the Euro USD, I'll be waiting to see two things. Because of this demand area here, if the price comes to this demand area at 1.14010, if my buyers come in, I will go long. Stop loss can be just below here, 1.1395. TP1 will be here, 1.15674. TP2 will be here. Let me just use this area here. Okay, this area, because of this resistance. This resistance that is here. TP2 will be here at 1.17608. But if the price pull back up, I can sell. I'll look for a sell entry for if price get to this area, 1.15739, and give me a sell entry, I will take. If it do not give me here and rise up here at 1.16654, I will take my sell. So for the sell entry, I'm waiting for price to rise to this area, 1.15790 or 1.16641. Stop loss can be above your 4-hour time frame candle close, the one you use as your entry. So your stop loss can be above it. Then your TP1, you can bring it back. You can take the your entry. Okay, yeah, sorry. You see this demand areas here. I was also expecting these demand areas to hold this price going up. If you are selling the Euro USD from here, if you take a sell entry of the Euro USD from here, please exit your TP1 around this place. Exit your TP1 here, then keep your TP2 here. I repeat, if you are selling the Euro USD from here, exit your TP1 here. And guys, and that is why once you are trading and you see areas like this, please respect them. Respect them. Don't look at it and be like, oh, I'm targeting here. Okay, if you see them, respect them. Respect them. Once you see all these people, respect them. They can fuck you up. Okay, sorry for foul language. So if you sell the Euro USD from here, you can take out your TP1 here, TP2 at this demand area. If you buy from this demand area, take out your TP1 at this resistance area, then your TP2 here. Okay, so let's move to the next pair, which is the gold. So the gold, analysis for the gold is very clear, and it's still what it is. For the gold, like I told you guys, I'm still bullish on the gold until price breaks below this support area, which I call my line of departure at 4405. My bias for the gold, I'm still bullish. So I'm waiting for price to come down to a good support area. And I'm seeing that this area is a good one. I want to take all this zone. I'm seeing that this area is a good one, and if I take my Fibonacci from here to here, I can see that this area lines up with my Fibonacci 5061.8. So like I told us, my bias for the gold is still bullish. So I'll be waiting for the gold to drop down to this point. So guys, so you can see that we've been doing this gold analysis for almost how many weeks now, and we are still waiting. That's how you have to keep waiting. If it takes, it's better to take, guys, and this is one thing you need to understand now, is it is better to take one good trade in a month, or in a week you have one good trade. With that, you can conserve your mental capital, because guys, you need to understand that when you go into a trade, when you take a trade, you are not only risking your financial capital, you're also risking your mental capital. Now, when you begin to take too many trades, your mental capital will be going down, because for you to take a trade, you are making a decision. You are taking a decision. You are analyzing. and as you are taking these decisions, it is reducing your mental capital. And that is when some traders, because they've taken too many trades, they've used up their mental capital, they are no longer thinking logically. They begin to make mistakes and do all kinds of things. So you can see this gold now. We've been waiting for this gold to come down here. And last week I told you guys that there was a time when this gold was doing as if it was going up. I told you, if it keeps going, I don't bother. Let it keep going. You must come to that state where you say, if you don't come down, keep going. Now, not be by force. It's not a do or die thing. Do you understand? If you want to keep going, keep going. Because it doesn't make sense. How do I make money if people are willing to pay $5,228 for the gold? If I'm buying it at $5,228, what is the guarantee that it will keep going up? What is the guarantee that when I want to sell to them, they will not tell me the price has dropped? So I must wait for a pullback. I wait to my buyers, I join them. Guys, very simple. So I say, if you want to keep going, keep going. If you are not pulling back here, and you can see, imagine people who have entered this trade and be like, oh, let's buy now. It's not pulling back, it's going, let's buy. See what happened to them. Many of them are still below. I told you guys, all their stop losses are still here. The market is coming. They are still holding, hoping that they are hoping that this stop loss will hold. They are hoping that this support will hold. This support will hold, and you have your stop losses here. If you are the market and you are seeing all these stop losses below here, are you not going to take them? Don't put your stop loss. Guy, this is another thing again you must learn. You can write it down. Don't put your stop loss where everybody is putting their stop loss. Allow the market to come and do its manipulation. I ask you again, if you are the market and you are seeing all this stop loss here, would you take it? This is free money for the market. You know how much is sitting here? The market will come and suck all of them out before going up. So, that is what I want to say. When I see the market suck, as the market is coming down, like all these early buyers here, when it takes all of them out, many of them that are buying, that have been stopped out, they say, the market have stopped me out, it's selling. They will enter, they want to revenge trade. As they are entering the sell, the market will now turn, all of them that is selling, take them out again. Crazy. This market, it will turn your brain. So you must learn to follow your plan. Pull back. If you are not pulling back, keep going. I am not interested. Guys, that's why hear me saying I am not interested. In fact, my slogan can be, I am not interested. If you are not pulling back, I am not interested. So for the gold, we will still be waiting. Pull back to this area. When they pull back, we'll wait to our buyers, then we'll join them. So let's move over to the next pair, which is the Nasdaq. You can see the analysis is quick because we've already done all this. We have already done this. So if you are new to the channel, when you go to the previous week, the last week video with analysis we did, so we covered all this. Like last week we really went deep to break down this setups. It took us almost an hour plus, so that's why today there's nothing much to do. So now for the Nasdaq, I told us also the Nasdaq is also ranging, and I told us also we're going to look. I'll be looking for a sell entry for the Nasdaq, which I got that sell entry last week. Although the market did not pull back to my location, but I took the trade. Why did I take the trade? Now, when we were doing this analysis yesterday, the market was here, and I was telling you guys that I'm expecting the market to pull back to this area, because I'm expecting the market to come and take out all these people selling this, buying all these early sellers. I want the market to come and take them out. That was when the market was here. I wanted it to pull back here. So, but what happened when the market opened? We saw this movement to the downside. Boom, 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 boom. We saw this gap here, and the market went down to this place when the market opened, this week. And when the market came down strongly like that, the buyers came back up strongly. When the buyers came back up strongly, I started to look at the market and be like, what is happening? And guys, that is why you see this trading, this trading is it's a psychological war. Like I told you, you must understand that as you are trading, you are competing with other traders. So you must learn to think that, what are they thinking? What are these guys thinking? What are they up to? What are the big boys up to? What are the small boys doing? What are the retailers doing? What are the institutions doing? What are they doing? Most. And that is why, for you to be a good trader, you must learn to meditate. You must learn to spend time alone. You must learn to think. You must be able to think. It's not just coming to place, buy and sell and think the market will just start giving you money. You must learn to think. These guys that I'm dealing with, what are they up to? What are the big boys up to? What are the retailers thinking? What are the institutions thinking? Why did they make this move? Is this a right? Is this move? What is going on? You must be able to ask those questions. So, you can see my mouse, right? I was like, I'm waiting for a pullback. I want the market to pull back to this area. It was here as at that time we were doing this, and I said, let the market pull back here. Then from here, if I see my sellers coming here, I will join them from here. I will join my sellers from here. So I will join my sellers from this point. So, but when the market opened, we saw this movement to the downside, and the next thing I will see, the buyers came back in. The buyers, they didn't even allow the market to breathe. When the market opened, the market came down to this demand area. The next thing, the buyers came back in. I was like, When the buyers came back, I was observing the market at this location. I say, with what I'm seeing now, price might not pull back to this location again. I was seeing, when the market got to this place, I was seeing this weakness. I was seeing this weakness. I was saying, okay. I was seeing this weakness. The next day, the market came back down. The buyers came in here with this candle, and the next thing, the sellers came in here. It was when the sellers came in here, I took this sell entry from this point. First, I saw that the market pulled back to a good. This is a resistance area for this. So that the market came to this resistance area and started. After the sharp move down, the buyers came back up. I saw this toggle here between the buyers and the sellers, and I looked left. I saw that, okay, this is a good resistance area. I'm not even talking about my 200 EMA that's also here acting as a resistance. I looked left and look at this area. I said, this is a good resistance area. I saw the toggle here. I said, if these buyers are strong, why didn't they continue? Why did they come? Why did they come to this resistance area? And the sellers begin to battle with them. Immediately I saw the sellers, they close below the resistance area. The buyers started to come back in. The sellers bring them down. It was when this candle closed. And there's another thing again. I look at time of day of week, time of day. It's another hidden edge for me. I will explain that later, guys. Day of week, time of day. For every time frame that you are trading, there are times, there's a window when the big boys come in. If the big boys do not come in at that window, leave the trade. You can see this buy move that happened there. I didn't even bother to even think about it. But there's a day of week and time of day that this buy move I would have seen this buy move, I would have taken it. So for every time frame, whether the 1 second, the 1 minute, the 5 minutes, the 15 minutes, the 1 hour, the daily, the weekly, the monthly, there is a window when these big boys come in. So when this bearish candle closed, it fell on that window. I was like, these guys are here. I took the sell. Even yesterday, when this bullish move came in, I didn't even bother myself. I said, well, I've set my stop loss here. It's a game of probability. You can go and take my stop loss, and the next thing I will see, these bears come back in. So in the coming week for the Nasdaq, I'll be waiting for the price. I told you guys that when the market is ranging, the market is in a range, we'll sell at supply, we'll buy at demand. Sell at supply, buy at demand. So I told us that once the market have left the supply area, its next destination is the demand area. And I told us that this price is coming to the demand area. You can see the market came to the demand area, but it moved sharp up. Now, this is another thing again I want to tell you guys. Please pay attention. This is very, very important. When the market gets to a good location, and the market just the big boys, they did not fill in most of their orders. I repeat, when the market gets to a location, the market just fly away. The big boys did not fill in most of their order. Now, they'll be waiting for the price to come back to that level so that they will buy back from that level. That is why I took this sell trade. As if with the way this market jumped up from this place, the big boys, they did not fill in their orders here. They were waiting for the market to come back here so they will buy. Maybe by then we might not see the market. There are so many locations here. There are so many areas here. I think the market is supposed to come and fill. Maybe by then the market will come and fill it. I don't know. Or maybe it will close below and continue its bearish move. Nevertheless, the market is still ranging. Even though I'm in a sell trade, I will officially, be bearish on this market if the price pulls back to this. If the price give me a significant break below, pull back to this resistance area, and I wait for my sellers to come in. This is the only time I will say, okay, officially, the Nasdaq is bearish. And if the Nasdaq breaks below this demand area, there's a good move we'll be seeing to the downside. A good move will be seen to the downside, a good move will be seen to the downside. A very beautiful move that, if that happens, you can see if we take the accumulation of this point to this point, you can see, okay, even my TP2 for my sell entry is DSF. My TP2 for my sell entry, that's where it is, around this area. My TP2, I sold it. I told you guys I sold the Nasdaq. Everything is clear. You can see, So what we are saying that we are saying is what we are doing. We are not telling you one thing and at the back we are doing something else. So if this sell move succeed in closing below this support area, the price is coming here. So my TP1 is at that support where I just leave my TP2 outside. So when the market gets to this demand area now, I'll be watching the Nasdaq. If it breaks below, I will hold on to my TP2. But if the market gets here, I close my TP1 and I'll be watching. If I see my buyer step in, if I get the buy entry, I'll close my TP2 and I will go long. So in this week that we are entering now, I'm looking at this level because I see the buyers coming here. I see the buyers coming here strongly, and I see that when the moves happen like this, the big boys are not filling their orders. They want the price to come there so that they can fill their orders. Nevertheless, we know that in the market nothing is certain. So that is why I took, I used 2 TP. The other one is just like, like 30% of, my 30% of my TP1. So when the price gets here, I'll close my TP1. I'll be watching. If the price breaks below, then I will hold on to that my TP2, wait for a pullback, add another position. But if the price did not break below and the buyers come in, I'll close the TP2. Then I will look for buy setup. So for Nasdaq, I'll be waiting to see price pull back to this demand area, and when the buyers come in at this point, we'll join them. But if price breaks below this support area, I'm waiting for a pullback to the resistance. The support will not come to this. I'll wait for a pullback here, and I'll join the sellers. Already I have one position already, so I'll just allow that one to keep running. So for the Nasdaq, I'm waiting for price to pull back to this support, then wait when the buyers come in, I'll join them. But if the price gets to the support and breaks below, I'll wait for a pullback to the resistance area. Then when the sellers come in, I'll join them. Let's move over to the next pair, which is the US oil. So as you remember, the US oil, I told us last week that the US oil is bullish. Of course, we all know that the US oil now is bullish. In fact, with what is happening now, we don't even know where the oil is going to. The height the price got to before was around 120. Maybe it will break that 120 and create a new high. We don't know. But the psychology of everybody, the mindset of everybody for now is that the crude oil is bullish. The crude oil is bullish. So, and guys, remember I told you guys last week that I said as long as this demand area is holding and bullish for the US oil, and I told you guys that for me to do anything with this oil, the price has to pull back. If the price did not pull back, I'm not interested. And that is why when you see a price moving, don't join the movement. Wait for a pullback. Whether you are looking to sell, the market is bearish, wait for price to pull back. Patience, guys, patience. I told us then that some people will be like, what gives you the assurance that this market is pullback? With the time, with the crisis that is going on, the market will be rise. I say, if it continues to rise, let it go to the moon. I'm not interested. If I don't see a pullback, it's as simple as that. I must get a discount. So, and I got that discount when the market opened. We saw this guy, the market flew up. I'm not even better. The next thing we will see is this bearish move, and that is the problem, because you might buy and the market will continue. What if the market decides to pull back? And you don't know when the market will pull back. You don't know. So you must make that decision that if you did not pull back, I'm not interested. Except you're a breakout trader, you have a strategy of trading breakout. But me, I'm not a breakout trader, I'm a pullback trader. I'm a trend pullback. So I must wait. You must pull back. If you're not pulling back, I'm not interested. My goal is to buy low and sell high. Buy low and sell high. Do you understand? So we can see this bearish move. Who will believe that with the war and the rest, that this bearish move will happen in the crude oil? And that is why listening to the news, know what is happening. But once you understand, your logic of trading, once you have a strategy, you have an edge, follow your plan. Leave the news. Later, you can start using the news to, to add up your strategy and your edge. Follow your edge. And you see this period where we are in the market now. This period is very crazy. The only thing that will save you now is to follow your plan. If you open your chart, wait for your plan. If you don't see it, shut down. But you must have something else that you are doing so that you don't start off first trades. So, the market pulled back to this area. I was waiting. I saw this movement happening. I was like waiting. Okay. Now because it pulled back, I saw this bullish move, but did not just enter. I was waiting. Until when I saw this candle close, and they close at my the window, my trading window. And I said, okay, this will be my big boys. So I step into the buy of this trade. I took my entry. So you can see my entry. My TP1 is at this height where the market has gone to. My TP2. Don't bother about my TP2. I don't even know where it is. You can see. I'm not even seeing my TP2. I just left my TP2. Where did I put? I think whether I put the TP2 at $200 per barrel. Because like I told you guys, without this war, the oil will still go up. Without the war, the oil will still go up because the oil it has gone down and it has been building up for a reversal. So, but with the war, the price just few. But without the war, the oil will still go up. I already know that. So, so I'm already on the sell. I'm already buying the oil. If you want to join this buy, if you want to buy the oil as a 4-hour time frame trend pullback trader, I don't know where you will join, because me, I entered here. I'll take out my TP1 here. If the market breaks above this level, the market closes above this level, I'll hold on to my TP2. At this level now, even at this line chart, at this plot, if the market gets there, I'll close my TP1. Well, if the market breaks above this level, if I see a break above this area, I'll hold on to my TP2. So I'll wait for pullback to add another position, maybe a pullback to this resistance. I will turn to support. But if the market gets to this resistance area, and fails to break above, and I see the sellers, because these sellers are coming strongly now, they might also come in strongly here, and I see the sellers coming, I will exit all my positions. But that doesn't mean I'm now bearish. I will exit on my position and wait for a pullback, because as long as this demand area is holding for the oil, I'm still bullish. So if you've not joined this buy move and you are looking to join the buy move, if you are fortunate enough and the market pulls back to this area, which I'm not even praying that it does that pullback on. So, but nevertheless, if the market, if you've not joined this buy move and the market pulls back to this area, you can buy from here. You can see that this is a good support area. So you must wait for pullback, no matter how small. You must wait for pullback. Just wait for pullback. You can't, no matter how. Don't look at the market has gone. Let it go. So I can see there's a good Fibonacci here. Okay, see this area. Let me take this area. So okay, from here to here, lined up with 5061.8, and it's a good support area, visible to the big boys. So anywhere around here you see the market pull back, to this place, you can join. If you see the buyers, you can join them. But this pullback, I don't know if it will happen, or even if you see the pullback here, you can join. But me, I've already taken a buy position, so I'm waiting for the price to get here. I'll take out my TP1. If it breaks above, I will hold my TP2 and wait for pullback to add another position. But if I see these sellers that came in strongly, if the price gets here, if the sellers come back, I will close on my position, wait for pullback, for me to buy. As long as this demand area is holding, I'm still bullish on the oil. So that is that for this week. Let's just do a brief recap. So for the Bitcoin, we are waiting to buy the Bitcoin. We wait for price to rise to this resistance area at 78,831. If you get your sell entry from here, you sell. Stop loss can be here. TP1 here as 63,000. Then TP2 can be at 50,000. If you wanted to buy this Bitcoin and you've not bought this Bitcoin, I advise just wait for the sell entry, because the major trend of the Bitcoin is bearish. You can wait for the sell entry. But if in the coming day you see a good way to enter, maybe you can, because it's coming up here. I'm not 100% certain, nothing is certain in the market. So this is a game of probability. So but if you get a buy entry, you can take and exit here and wait for the sellers to come in. But if you just want to preserve your mental capital, just leave it and wait for the sell entry from here. This sell entry is a good one. You take it from here to do you good. Stop loss here, TP1 here, TP2 at 50,000. So the next pair is the Euro USD. So for the Euro USD, we're waiting for price to come down to this demand area. If price comes down to this demand area and we see the buyers coming, we'll join them from here. TP1 at this point, TP2 here. So the buyers coming here, will join them. Entry will be here around this point, 1.14307. Stop loss 1.13922. TP1 here before this point, this resistance at 1.15661. Then TP2 can be here before this resistance, 1.17608. If the market pull back, you can either look for the sellers. See the sellers coming from this point, you join them. They're not coming from this point. If you see them from here, you join them. So if you are selling from here, stop loss can be here. If you are selling from this place, 1.15713, stop loss can be here. If you are selling from here, 1.16641, stop loss can be here. If you are exiting, be careful of these guys here. You can take out your TP1 here and leave the TP2 here. The Euro USD also has the potential of breaking down. So if you are selling the Euro USD, you can use 2 TP and allow the other one and leave the other TP open. Maybe the Euro USD will break below this support area. If it breaks this below support, this area, this support, we'll wait for a pullback. If it breaks below that support, it means we've seen a major, trend change in the Euro USD, USD. Please don't mind me. So as I can see that there's a good, there's a level here. So market might come down to this point because this is a bullish move. This is a bullish move, and the market is flagging at this point. Let me remove all these things so I don't confuse you. I love clarity. So this is a bullish move. This is a bullish move, and we see a flag here. The market can press down before going up. That's when they will say the market has done accumulation, manipulation, distribution. If you are selling this Euro USD from this point, you can use 2 TP, take out one here, then leave the other one in case the market decides to break below. But if the market gets to this demand area and the buyers come in, exit all your position, take what the market gives you. And guys, swing trading, for the kind of market we have now, you have to be very, very careful with it, because the market, it's not moving like it used to move before, but there are a lot of players now in the market. So people are buying, they are selling. So it's not moving, you see the market trending up, trending down, begin to go down, or trending up, begin to go up. You can see how long the market have been ranging here, like it moves like this. So, yeah. So let's go back to the 4 hour. So for the Euro USD, I'll be looking to buy at this demand area, and I'll be looking to sell from this resistance or this resistance. For the gold is a very clear move. I'm waiting for a pullback. I'm waiting for the gold to pull back into this support area. Stop loss can be here, TP1 here, and TP2 here. The gold is clear, the bias is to the upside. Then for the S&P 500, for the Nasdaq, I'm waiting for price to, let me remove this. For the Nasdaq, I'm waiting for price to pull back to this demand area. From there, I expect the buyers to come back in, because when the market came here, they bought this market, but the buyers did not fill in most of their position. The market just came and flew. So when it comes down here again, the buyers will have their position. Maybe by then we'll see the market coming to fill out. I'm seeing that there are some spaces around this place that the market is supposed to fill. Maybe from this demand area now to come and fill it before coming back down. So if the Nasdaq gets to this demand area, if the buyers come in, I will join them. Can take TP1 here and TP2. And exit it somewhere around these areas. So for the Nasdaq, our entry will be around here. Stop loss here, TP1 here, then TP2 at this point. Then for the US oil, if you've not joined this buy move, can wait for the market to pull back. So yeah, if you want to take it, then wait for the buyers to come. Then join the TP1 here, can leave the other one to fly. But with the market pull back, we don't know. But as a trend pullback trader, the market did not pull back. Don't buy the markets here. If you've not entered this buy, please don't buy it here. Even you can see where my entry is. You can see where my entry is. Any pullback now will be in drawdown. If you've not bought, don't buy from this point. You must wait for a pullback. So guys, thank you for staying to this point. I was even trying to be fast, and we'll still use almost 1 hour for this video. It's 5 instruments we are covering, so it's going to take time. So guys, thank you. Please be careful while you are trading. Remember, you are not only using financial capital in trade, you're also using mental capital. So protect your mental capital first, so that you can be able to make good financial decisions. Until I see you, next week, please take care of yourself and protect, your capital. Thank you.